Hello and welcome. You're watching News Center. I'm Parikshit Luthra. Market regulator Sebi has barred Gensol Engineering's promoters Anmol Jaggi and Puneet Jaggi from the securities market and from being directors on the board. Sebi has ordered a forensic audit accusing the company of fund diversion, round-tripping and breaching trading rules. The Sebi's interim order revealed that the promoters raised money for the company but instead allegedly used it for personal purposes and in the process misled investors. Anmol and Puneet Jaggi, the founders of Gensol Engineering, a company focused on solar energy and EV leasing, are also the founders of electric cab service BlueSmart. As per Sebi's allegations, a part of the funds raised to buy electric vehicles was transferred to private entities of the promoters. Sebi discovered that 26 lakh rupees was spent on a golf set, 3 lakh rupees on a trip, 66 lakh rupees on foreign currency, and 33 lakh rupees on an American Express card bill. Sebi also flagged instances of market manipulation where 10 crore rupees was round-tripped from Gensol Engineering to subscribe to its preferential issue. Remember, this is an interim order by Sebi and a forensic audit could unearth more details of the money trail. Meanwhile, BlueSmart has halted its cab hailing services in Delhi NCR and Bengaluru after Sebi's order. Joining me now is Hetal Dalal, President and CEO at Institutional Investor Advisory Services. We'll also be joined by J.N. Gupta, founder at the Stakeholders Empowerment Services. Hetal, if I can begin with you, from the Sebi order, it's clear that the Gensol promoters were using the company as their personal piggy bank. What was the biggest red flag for you and the biggest question for the promoters?
I think the fact that the company had related party transactions and so many of these is inherently a warning signal to start with, right? The fundamental question, even when you look at all the resolutions which have been passed for the company and the transactions, the annual report, the question you have to ask is why is the company supporting so many group companies? You know, from saying that there is this whole set of promoter companies to which it is providing guarantees and fund support, to the extent of saying that, if BlueSmart is a separate fleet operator, why does the company need to buy and, become a lease operator for that fleet operator? There's no reason really for all of this to happen. So essentially the balance sheet of the listed company is being leveraged for all the excesses for the promoter as well as, supporting BlueSmart, which is clearly also a promoter-driven company. So I think just having so many related party transactions, asking, this is essentially a red flag in terms of just asking why should so much of support be given to parent companies. I think the other piece when you look at it is really cash flows. When you look at the company's growth, really you have to figure out whether it's finally resulting in cash. Cash is really king. And while the company is showing increasing revenues, increasing profits, is it really showing you that degree of cash flow also which is getting generated from the business? And if you look at Gensol's numbers, you're not terribly convinced that the operating cash flow is so strong for you to think that the growth is that real. I think the third thing, of course, is looking at the promoters' backgrounds, what have they accomplished in the past, and why have they listed this particular company. And fourth, also the shareholding. Where promoters are losing equity, you look at it when the promoter shareholding from March 2020 to now, there's been a significant drop from about 70% has almost become half. And the kind of promoter pledges of the pledges of that equity, right? So the promoters pledging equity and consistently the pledge quantum is increasing. That is indeed a warning signal in terms of why is the shareholding being pledged and can this therefore be a result of change in control? And if the equity is being pledged, there is clearly debt being taken. So where is the money going? Is the promoter taking money for their own personal capacity? Is it being used in the company? And at the end of the day, where is the money being used, even if it is being raised? So I think some of these things are very clear, simple red flags that investors could have picked up very early on in the story before, and is also clearly getting pointed out in far more granular detail in the Sebi order.
Right. But Hetal, one, of course, is a clear lapse of governance procedures. But at the same time, what about the responsibilities of the board, of the independent directors? Currently, Sebi has taken some action against the promoters of the company. What more do you expect?
So I think there is very clearly layers of failure, if you ask me. From the audit committee failing in terms of being able to capture some of these issues and be able to ask the right questions, addressing issues around support to group companies, also this whole leasing to BlueSmart. All of these are not really the ordinary course of business for a company which is essentially in the EPC for solar projects. So I think the audit committee failure, it does exist. The second failure will be for the auditors. Why is it that so much of round tripping is happening? The auditors haven't managed to catch it for so many years. So I think these would be the two critical failures that you would see from a governance standpoint: the audit committee, the board, and also the auditors.
Right. Mr. Gupta, thank you so much for joining us as well. What do you expect Sebi to do next? Now, this is a very detailed investigation that has happened over the course of the last 1 year. There was a complaint that was received in June, or probably before that, last year, and then an investigation followed. There have been visits to their so-called manufacturing facilities as well, and in the order, it is well stated that when the officers visited these particular sites, there was no manufacturing actually going on. There were no bills for electricity as well. What do you expect Sebi to do now? And do you feel that this could also result in other investigations around round-tripping of funds, about maybe money laundering as well?
Thank you. The issue is very clear that if you are having a thief or a person who is wanting to commit fraud, it is very difficult to stop the fraud ab initio because you don't know which direction you will go. But the fact that this fraud has taken place, this tipping has taken place, you can't put the blame only on the promoters only. The promoters could not have done anything unless entire team of the finance department was with them. Because the moment some bills are coming, some things are going to the thing, you have to have a backup of a contract and you understand that what is the contract. So the issue is very clear. Frauds will continue unless until you start catching people who are part of the chain. As Hital has very rightly said, that audit committee, auditors, board, everybody, see what happens when you put a board, when you ask independent directors, you feel that independent directors are much more capable than the people who are managing the company so that their wisdom can be used. Now, when you say independent director turn around and say, how can we do, what we can do if this is happening, then let us not have a board or let us not have an audit committee if the frauds have to happen. Having said that, it is not a case that all 1,000 companies or 5,000 companies, this will be there. But again, the issue is that if this is happening in 10 companies or 20 companies, it is a serious issue. The other point is very simple, as you have been showing the round tipping and something. Everything is possible to be changed because the merchant banker who is doing preferential offer would certainly know from where the money is coming. If you look at many preferential offer, not of the big company, but a small company, you will find that they have been putting money, which is much more than what dividend they would have earned from the company or what they would have earned from the selling the share. Unfortunately, we are not able to trace what is the origin of funds and what is the destination of funds. This is one part. The second thing is this, the issue is if you look at the shareholding pattern, hardly there is any institutional investor. Everything the promoters have been able to palm off, they have been palming off to retail investor. So my issue is very simple. Surveillance of Sebi should also be very, very focused on such companies where, although institutional is absent, but the share prices are rising, the performance is superlative and something. Imagine a situation where all the people who got lot of wisdom, 40 mutual funds, 10 insurance companies, hundreds of FIIs, and a company is giving superlative performance, profit multiplying from 1 to 240 times, and nobody is willing to invest. So there is something wrong somewhere. So we will have to be a bit step further than these promoters. Now the issue is that the promoter buying some 100 crore, 50 crore apartment for themselves. It's an issue where you have not earned the money, but you want to live in luxury on the borrowed or public money. And fraud of giving IRDA or PFC letter, I think this is a criminal case and this they should be proceeded against. But I would say, please put in loop company secretary, CFO, accounts department, audit committee, board, and statutory auditor and secretary, all. Don't do anything, at least call them for investigation so that message goes round that if you are part of this whole game, one day Sebi is going to call
Right.
you. It is not necessary that
That's an
you
important
punish
point,
them,
sir.
but call them.
Right, right. Hetal, if I could come to you, what is the lesson in all of this? Of course, for retail investors to be more vigilant, but on the other hand, we do see some level of scrutiny with regard to companies which were startups, recently got listed. There seem to be governance lapses, and many observers say that your intent may not be wrong, but you are in a rush. You are ignoring governance norms in the process. Do you see that happening across companies? Is that something that your organization is watching out very clearly for?
So look, I think to paint the entire market with one incident, I think is unfair. You will see governance failures across markets independent of how developed they are. So this is clearly one has to use some of these examples sort of in moderation. But when you look at governance failures, see, this is essentially fraud, right? If the promoter has an intent to defraud the investor or defraud the lenders, then that's just intent. But when you look at broadly from a governance perspective, we did an analysis a couple of years ago to look at the governance of companies which are recently listed 3 years and prior, with 3 years of listing experience, and those which have been listed for a much longer time, the BSE 100. And clearly, we found that the quality of governance for newly listed companies, there's a significant difference between those at BSE 100, which are mature businesses, which have been in through the cycles for a long period of time, vis-a-vis those which are newly listed. And that's a function of the fact that when you look at companies which are newly listed, they're still understanding the whole game of public market investors and what it means in terms of their own expectations. So their governance structures are still nascent and not necessarily tested. Are they always bad? I think that's too much of a broad brush to use. But to be fair, when you look at well-governed companies, what we typically see are three commonalities. One is a fairly diverse board, not just from a gender perspective, but also from a skill set perspective. Second is a very high degree of independence of the board, right? So board independence levels are high. So it's not about your regulatory checkbox of saying 33% independent directors or 50% independent directors, but by and large, you'll find almost 80% of the directors on the board are independent. And the third thing you find is a very large institutional ownership. Now, you may argue the chicken and egg, does the company attract more institutional ownership because it is well governed, or do institutional investors bring in better governance or compel better governance? That's indeed a question which we can keep sort of toying with. But these are the three broad commonalities that you see for well-governed companies. And therefore, when you look from an investor's perspective, if you're trying to figure out and you don't have a great understanding of what these companies are, but whether they're well-governed, I think some of these things are good checkboxes to have, and it gives you a certain degree of a higher degree of comfort. Of course, quality of the board is something you must look at in terms of what is the experience, how where do all these promoters, where all these independent directors come from, and some of these background checks need to be done. But by and large, when you look at the comparability, this is really what you see between companies which are recently listed vis-a-vis those which have been listed for a very long time.
Right. That's an important point, and that's a lesson for retail investors as well. But Mr. Gupta, what would be your view, and what can the company now do? Of course, there is a legal recourse that the promoters can take. There may be more action. But what are some of the checks and balances or corrective measures that the company can take immediately as well, according to you?
See, first of all, I will come to the point Hetal said, that board people in the board experience something, and I will take you to ILFS. ILFS had probably the best possible board, but there was a mess there. So it is not a guarantee that if you have a board which is good will be there, because it depends upon how the board is performing. And performance is not guaranteed just by the name. That is one. The second thing is this. I will say with a full responsibility that it is an unfortunate situation in our country that legal system is such that even after finding all this, we are talking about that the promoters have a legal recourse to do something after forging and taking company for a ride. That is one very, very sad part, because of that only we are not able to move to a governance standard which will give comfort to all investors. Having said that, the next course of action would be that further investigation, forensic accounting, forensic audit has been ordered, and then SEBI should find out who else are also responsible for this mess. It is not promoters are the beneficiary, but who has allowed them or who has facilitated their benefit. Then we will find out who are the more people to there. Next is how to stop this. I have no clue how to stop it unless until everybody starts playing its role. See, the lawmakers can at the most provide the law. They can provide the check post. But if the check post people are sleeping, then what do you happen? Or if the check post people are in connivance, what do you do? So the issue is very clear. The laws are made, they have to be enforced very strictly, and the courts have to be seized of one issue. When issues like this come,
My
don't
final
look
question.
SEBI as a litigator. Look at millions of victims who are there as a litigator.
That's an important point. My final question, sir, very briefly, what is the message that SEBI should send out with this case, according to you?
See, the SEBI should have sent out very simple message that we mean business. We will not let you go. We will not let you go scot-free. And we will go after anybody or everybody who has been part of this mess.
Right. Thank you so much, sir, for joining us. And thank you very much to Hetal as well for those important views. Clearly, lots of lessons there for companies, listed companies and retail investors as well, when they and when actually they should sit up and take view and take stock of such situations. We're taking a break, but coming up on the other side, the Supreme Court grills the government over the recently passed Waqf Amendment Bill as it begins hearing a slew of petitions opposing the new legislation. Details in just a bit.